brief intro into Alpha Wealth and what we do. And again, I'll introduce then Brendan and Owen to that. So typically, for those of you that are not familiar, I set up Alpha Wealth about 6 years ago. There's currently 6 of us working in Cork primarily. We do have a small presence in Dublin, and we provide independent financial advice to individuals in really 3 core areas. Typically, they tend to cover the areas of pension planning, savings and investments, and insurances. Today really is about, as I said, the investment side, and we have done a lot of work with Blackbee Investments, who are based in Cork themselves. They do have a small presence in Dublin also. And I've worked very closely with Brendan and more recently with Owen, who I have to say I do rate very highly. And I think you'll get a very good sense from them today as well. Now, in respect of the presentation, for those of you that have just joined, it's going to be a session of about 25 minutes or so. I've asked Brendan and Owen just to give their thoughts about the current climate that we find ourselves from an investment landscape, a little bit in terms of Blackbee and what Blackbee Investments have done heretofore and the opportunities that Blackbee can provide, and also specifically talk about 3 investment opportunities. And just to give a very high level, just before the guys get into the kind of, I suppose, the nuts and bolts of the presentation, one of the things that I wanted to say is that these investments are available for individuals, for companies, and for pension funds. Now, I myself am a business owner, and I suppose looking at this presentation, even from a business owner's perspective, it gives me the ability to look at these opportunities from any personal funds I may have, any company funds, and also any pension funds that people may have, even if they're from legacy pension schemes with the likes of Irish Life and so on. The guys have allowed an entry level of 10,000 euros. So just to mention that these investments, which are all relatively short term, they're 2 years in their duration, the ability for people to invest is at 10,000 euros, okay? And as I said, you know, typically these entry levels have been a lot higher, but the guys have kindly allowed that for investments in this particular phase of what we're doing. So what I'm going to do is I'm going to pass it over to Brendan and to Owen. And as I said, please feel free to use the chat forum, or indeed, if you could reserve any questions at the end. If you haven't already, most of you are automatically on mute, but just if you could keep your mics off mute just for the duration of this, that would be appreciated. So I'll pass over to Brendan and Owen. Thank you.
Thank you very much, Nick. Good afternoon, all. I guess firstly, first day of lockdown, and it's great and well done to Nick and the team in Alpha Wealth for putting this webinar together. It's great to see so many people on the call, and great to see that there is an appetite to do business, even though, as I say, we are in lockdown. And I hope that what we present today will give you a little bit more information, firstly about Blackbee Investments in terms of who we are, and then secondly in terms of the investment products that we have for Q4 that we're very excited about. So firstly, Blackbee, we're an investment firm. We're based here in Cork. We have a very, very strong team base here, and as Nick said, we do have a smaller Dublin presence. Everything we do is based around the macro and the macro impacts on the investment landscape. So what we're looking at the moment is we're looking at a global economy that looks like it's not going to recover until mid-2022 due to the impact of COVID. So we're going to see fiscal spend dominate for the foreseeable future, and that is going to lead to lower interest rates. And so we're going to see a trend of lower for longer. And what the impact of those interest rates means is that leverage into investment products becomes a much more attractive proposition. So in terms of our strategy and what drives us, what we want to do in particular is focus on a number of key strategies. The current strategies that we believe very, very strongly in are commercial office, residential, social housing, and healthcare. Renewable energy has been another key tenet of our overarching strategy, and we will be looking at producing further products in that in early 2021. So our overall strategy as well has been to develop strong, a small technical glitch here. So as I was saying, our key strategy is underpinned by our relationships with key asset management partners. And we're going to continue to drive that, whether that's in commercial real estate or in our healthcare platform going forward. So firstly, we have a very, very strong view on commercial real estate at the moment, and in particular, Dublin commercial real estate. And that's driven by the fact that bond yields are tracking negative, there's volatility in equities. So we believe that commercial real estate in particular remains a risk-appropriate asset class to allocate to and generate yields for investors. In particular, in commercial real estate, we have a focus on two specific subsectors, commercial office and social housing. Owen will speak to you about social housing shortly, but firstly, I'm going to speak about commercial office in Dublin. So, Dublin, what have we seen from a commercial office perspective in Dublin and the impact of COVID-19? So, there are two key points that we like to analyze, and that's the rent collection and also the vacancy rate. So from a Dublin perspective, we have seen that rent collection has been very, very resilient throughout the COVID-19 period. We have seen from our own portfolio rent collection rates very, very high in terms of 95%, and that's also echoed by other publicly available benchmarks such as Ugrove REIT at 96, and also Hibernia REIT also in the high 90s. The vacancy rate in Dublin remains below its natural vacancy rate. Typically, that's about 11.5%. In Dublin at the moment, depending on what stats we use, that is either between 6 and 8%. There has to be a focus post-COVID. What is going to happen to office space in Dublin in a post-COVID environment? Our strong view is that there's going to be a trade-off between utilization and space. And what we mean by that is, we look at reports recently from a PwC survey that said that 88% of CFOs are going to reconfigure their workspace. The old rule of thumb of an employee needing 10 meters squared of office space, that is going to have to increase going forward, and that will lead to a trade-off between the space that is in use in terms of employees rotating from a working from home scenario to those office workers that are actually present. So, with that in mind, we have a very, very exciting product that we're looking at launching for Q4, and that's the City Quay site in the heart of Dublin. The City Quay site is located right beside the Ulster Bank headquarters on City Quay, facing the river. It's a 0.55 acre site. What we're going to do here is bring that site into a standalone company, develop, along with our asset management partner, Redquartz in Dublin, circa 140,000 square feet of commercial office space. That delivery of office space is very much on a conservative basis. We have seen planning granted for other developments very, very close by in terms of the Johnny Ronan Aqua Vetro Tower or the Martlet Capital Apollo House development, where the relaxation in height restrictions has delivered a far greater square foot office space in terms of the site size. So we believe 140,000 square feet, sticking to the local area plan, is a conservative base case scenario. We're not bringing on any development risk into this product. We're looking at bringing this site through planning over a 2-year period, utilizing a very experienced asset manager in Redquartz. So the key points of this investment are, it's a 2-year term. The underlying asset is a very, very strong, well-located site in the heart of Dublin with the ability to deliver very, very strong planning. And we're looking at developing a 20% IRR annual return for investors over this 2-year period. This investment is available now, and Nick no doubt will speak to you separately on it. And we have a very, very detailed information memorandum that is in circulation. So that's our first offering in commercial real estate that I'm going to speak about today. Owen is now going to chat to you a little bit about social housing and a very attractive offer we have in that particular subsector.
Thank you. Social housing is obviously a very topical issue. It's a huge political and social issue for the country, and it has been a focus for the past number of years in the public realm. The reason why Blackby has been attracted to investing into the sector is driven by two main reasons. One is the very significant structural imbalance between housing supply and demand in this country, and particularly impacting on social housing, and also the ability to link through to government income by securing long-term leases on properties. To look at the overall macro environment for social housing, it's very much encapsulated in this graphic that we have developed. It shows obviously the gap between social housing delivery and social housing demand over the past decade or so. And a couple of very key points on that graphic, maybe just to focus in on. If you look at what happened in the last recession, where 2008 to 2011, there was a huge spike in demand in social housing. This is something that we strongly believe is going to be very relevant in the existing post-COVID world. When we look at what the impact of COVID on the overall environment, we can also look towards the ESRI report that was issued a number of weeks ago, which very much aligns with our views of where the market is going to go. Basically, over the past decade, we've seen social housing being impacted by a rising population, constrained construction activity, reduced affordability, and constraints on credit access driven by central bank regulation. These are all issues that we believe are going to become more relevant in the next couple of years. And the ESRI report very much aligns with that view. We can see that unemployment rates are going to increase, income levels are likely to reduce, bank profitability is going to become an issue which will reduce credit and access to credit, and in general affordability is going to deteriorate. And when we look at the supply of housing into the market, we can see that housing supply last year, which was in 2019, was the record year for delivery over the past decade. Only 21,000 units were delivered against a requirement in the country of 30 to 35,000 units. The COVID impact on that for this year and next year is expected to reduce output to around 15 to 16,000 units. So really, the imbalance is going to deteriorate, and the call from the ESRI is that the government step up and increase their funding levels into social housing, and that's something that we've already begun to see in the budget of last year, where an extra 500 million was committed to the provision of social housing in 2021. So a very big social and political issue, and a deteriorating situation, but one that actually makes a very compelling investment decision to invest into the supply of housing into the sector. So when we look at this, the product that we've launched, we launched a product a number of weeks ago. There's a detailed investment memorandum available on this, but some of the key features that I'll just run through some of the key features on that, and maybe explain a little bit of why we've structured the product like that. So it's a 2-year investment term. It's offering a first legal charge over all of the assets in the investment, which are going to be social housing units. It's an 85% loan to value covenant. We're able to achieve an 85% loan to value and maintain it at that level because of the equity that's been brought in up front in combination with our residential development partner for the project. It's a 6% coupon per annum offered on a growth and an income basis. We're targeting minimal development activity on this. The strategy is to refit and refurb existing stock or nearly finished stock located in regional counties of Ireland, where there's an established need for social housing throughout the country, and we've done the analysis on the regional counties where there's been a lack of supply of social housing into the regions, which has had the result that people on social housing waiting lists in the regional counties on average wait longer for delivery of units than those in urban areas. We're partnering with an experienced residential developer, a developer who has particular expertise and experience over the past number of years of developing social housing units and delivering them into social housing bodies, approved housing bodies, and local authorities, particularly in the regions. The overall strategy here is to aggregate 100 plus social housing units, create a portfolio of these units, secure them onto long-term enhanced leases, which are fully backed by the government. They offer 25-year leases, up to 95% rental income. There's no break clauses on those leases, and they're linked to inflation adjusted every 3 years. The exit for this product, the primary exit mechanism is into a social housing fund that Blackbee is setting up at the present, where we will take out all of these units into a longer term hold product that will produce long-term income underwritten by the rental income on the social housing units. Because there's a targeted loan to value of an exit loan to value of 75%, that obviously opens up other opportunities to exit by securing long-term finance from senior debt providers as well. So that's the overview on the social housing product. I'll hand you back now to Brendan, who will talk us through our healthcare offering.
Thanks, Owen. So healthcare, and in particular nursing homes or long-term care, is an area that Blackbee have a particular sectoral expertise in, and have worked with Nick, for example, in terms of a number of investments over the past couple of years. So the nursing home environment in Ireland is very, very particular. It's very fragmented. What we have is a lot of single owner homes or single owner nursing homes in the market, which is going to lead to a lot of consolidation in the coming years, and has been seen in the past couple of years as well. The nursing home sector is very heavily regulated by HIQA, the Health Information and Quality Authority, and different to other regulators, HIQA is regarded as being a very, very strong and fair regulator. Blackbee are happy investing in that regulated environment for the simple reason we see what HIQA do, and we see the due diligence that they conduct on the individual homes, leading to a level of comfort and a level of confidence in terms of what homes need to do to maintain those high levels of regulation. Also, the nursing home industry in Ireland is underpinned by an income stream known as the Fair Deal. So what the Fair Deal basically is a government-funded support scheme that pays for nursing home residents. In Ireland, typically, in a typical nursing home, 90% of the residents utilise the Fair Deal scheme, with the remaining 10% being private, self-funded residents. The Fair Deal scheme in Ireland has come under a lot of scrutiny over the past couple of years, and indeed in the last year in particular. So the anticipation is that this Fair Deal scheme will increase for private nursing homes going forward to ensure that the level of care and the quality of care is maintained for our older residents. Last year, we looked at the nursing home market in particular, and it was something that we wanted to get more involved in from an investment perspective. So we created a healthcare fund, and that healthcare fund had a very, very distinct strategy. The strategy was to become one of the top nursing home care providers in Ireland. And that was through a mix of acquiring existing nursing homes and developing top-of-the-range new homes, with focus on Munster in particular. So rather than having a disparate operating model, we formed an operator. That operator is APRE and is based here in City Quarter in Cork. We formed a very, very strong management team in terms of Paul Kingston, who was a former CEO of the Care Choice chain of nursing homes. And Paul brought some of his former management team with him, in particular CFO Hazel and head of HR Thrace. So this strong management team is what's going to drive the quality of care into our investments. We have a very, very distinct strategy in terms of developing an acquisition pipeline and also developing homes. So at the moment, we have acquired 2 homes, are in the process of acquiring 2 more, but also have operating contracts with 7 more homes. So within a very, very short space of time, we are now one of the largest nursing home operators in the country. And that just gives an illustration on the fragmented nature of the nursing home market in Ireland. To also compound this, we see interest in the nursing home sector from European investors. We see the likes of French large institutional investors like Orpea and Corian coming into the Irish nursing home market and aggregating nursing home assets. So what we're doing is we're delivering from an Irish perspective, an Irish healthcare fund with an Irish operator delivering a high quality of care to its residents, both through existing homes and the development of new state-of-the-art homes. So as part of this fund, that fund is a 7-year fund, but we also wanted to provide availability for a shorter-term investment into this fund. So here we have the Healthcare Bond 5, and that Healthcare Bond 5 allows investors to participate in the performance of the long-term fund over a 2-year period. The fund itself, the bond itself looks at paying a 6% coupon per annum, and this 6% coupon has a measurable social impact. It's investing in existing nursing homes, and as I mentioned, also looking at the development of new homes in the Munster region. The team here that support in terms of APRI are a vastly experienced and proven team. These guys have been there, they've done it before, they know exactly how to provide a quality of care for the resident. And we believe very, very strongly that that quality of care builds reputation, builds our underlying business, and that leads to better investment outcomes for investors. The bond itself is secured in shares in the overarching healthcare fund. And one thing that we're very, very confident on is the underlying demographics in terms of the long-term care sector in Ireland. We're an aging population. We have an aging stock in terms of nursing homes. And so we strongly believe that the investment in this sector, both from the acquisition of existing homes and the development of new homes with a strong and experienced nursing home team, is going to deliver quality for residents and better investor outcomes, as I mentioned earlier. So that's the current Blackbee offering in terms of the healthcare bond. And I'm sure Nick will speak to you individually on that. We have a very detailed information memorandum in the market on that as well.
Thank you very much, Brendan and Owen. So just before I open the floor up to questions, I just wanted to do a very brief summary. I know a few people came onto the call slightly later, and there is a video being done today which we can forward on. David Looney, the other financial advisor, myself would be happy to share. I just wanted to kind of clarify again. So the guys in Blackbee, and I feel, you know, for those people that maybe have had an experience already with Blackbee, it's really good to hear from the guys that are managing the projects directly. The opportunities presented today, there's 3 investments, all of which have an entry level at €10,000. And as I mentioned earlier, these are available for personal monies, pension monies, and company funds. And the key thing, I suppose, to note is that the term duration of 2 years, and in the case of the social housing bond and the healthcare bond, these both offer a fixed coupon of 6% per annum. The City Key investment is a higher risk investment opportunity. And I suppose if it helps just to have a very high level, just a general understanding of that, which is obviously looking to try and get a potential of 20% per annum. And with that, obviously, is the risk, but also the reward. And as Brendan has gone through earlier, there are very strong arguments as to why investing in Irish property in Dublin from a land perspective as a planning investment over the next 2 years makes a lot of sense, particularly if you are taking a COVID discount into account. So I'm just going to open the floor up to questions. Just to remind you that those of you that would like to ask a question, if you could just unmute your mic and feel free to do so. For those of you that prefer to maybe ask questions on the chat, or indeed speak to Dave and myself later, or indeed Brendan or Owen about any existing Blackbee investment, or indeed any of the 3 investments, the guys are more than happy to do so. So I'll open the floor up, and again, thank you very much for your time, guys.
Hiya, my name is Rachel, and I had one question on each of the investments in relation to risk. Would they all fare on the same type of like risk spectrum, or would some of them be more higher risk or medium risk investments?
Hi, Rachel. Brendan here. Thanks for the question. So, as Nick just touched on, really the risk profile of the three investments is slightly different. So, when we look at the City Key investment, for example, that would be higher risk, and the return is reflected in that in terms of delivering a 20% return. On the social housing investment side, that will be on a lower risk rating, for the simple reason there is security of first legal charge underpinning the investment, and then that is also reflected in the return, albeit still very, very strong at 6%. The nursing home bond as well would be on a par on a risk level with the social housing investment, again secured by shares in the healthcare fund, where there are very strong underlying assets within that fund, and again reflected in the investment return of 6%. So I would say, just in summary, the healthcare and the social housing would suit a lower risk appetite, and then the City Key investment is higher risk but also generates a very attractive return.
Actually, can I just ask a question as well? I suppose this one's more for yourself, maybe, Owen. Can you just maybe give some thoughts as to how you felt the budget, particularly in terms of social housing, would have impacted upon I suppose, the philosophy of the investment bond that you guys have created?
Sure. I suppose what we've seen in the budget is an extra allocation from the government of 500 million towards social housing. They're particularly targeting, they set in place a strategy a number of years ago, encapsulated in something called Rebuilding Ireland, where they've set a target of 50,000 units that they wanted to deliver in 5 years. They had 3 different mechanisms for delivering that: through building their own units, through acquiring the units from private developers, and also from leasing the units on long-term leases. So what we've seen in the budget, and commentary from Michael McGrath supports this, is that they want to try to move maybe away from buying units from private developers. They had numbers set aside, each one of those delivery mechanisms, for achieving in that 5-year time frame, running from 2016 to 2021. So we've seen that they've actually already achieved their numbers for buying the units. So that the real focus going forward, we believe, is going to be building their own units and leasing the units. And when we look at the fiscal expansion that's going on in the country, witnessing that in that budget, which we've never seen a fiscal expansion of that level, and we see what they're targeting their extra 500 million in towards. It's going to be towards the leasing and also the development of their own units. So what we're doing in our bond is we're targeting the leasing of units. It's a delivery mechanism that didn't prove very attractive initially under their strategy. They've only achieved 40% of their required targets. They've brought in some enhancements on the long-term leasing, which is what we're targeting in this bond, which are delivering units at a scale into each local authority, but also paying up to 95%, which is an increase on the standard lease. So that's something we see continuing from the budget space, particularly in respect of the capital expenditure required. They need to have a balance between leasing, which would have a lower capital outlay than obviously than building or buying their units.
Very good, thank you. Are there any more questions that anyone would like to ask just before we wrap up?
Nick, I saw somebody pop up on screen there in terms of the chat, in terms of looking for what the return on the 7-year nursing home fund is. 7-year nursing home fund is targeting an 11% IRR, so that's an 11% per annum return, and that's on a 7-year basis, and that's based on the fact that we're looking at acquiring in the region of 14 to 15 nursing homes and building 6 more state-of-the-art homes. So we're looking at an 11% internal rate of return on that investment.
Very good. And sorry, that is another investment that is available within the stable of BlackBee. It just wasn't one that was highlighted today, but absolutely, again, David and myself can talk through that. So just to maybe finish off very briefly, and again, we'd like to kind of strongly recommend BlackBee investments. I've had dealings with BlackBee over the last 5 years. I would have known the guys in BlackBee previous to, I suppose, setting up the company, and I can certainly verify and vouch for them. At Alpha Wealth, and I suppose this is more of a gesture for the times that we find ourselves, and just to reiterate from a fees perspective, if someone wants to make an investment of 10,000 euros into any of these products, it is a net investment of 10,000. There are no fees taken off the top. There are no management charges. So the returns that are quoted, and specifically to take, say, the social housing bond, the 6% per annum or the 12% over 2 years, it is a return after fees. Now, there are closing dates to these products, and obviously because of the demand, some of these products may close early. There is still about 2 weeks, certainly, in these products as it stands. And again, David and myself are happy to talk through the nuances of that. And Alpha Wealth are offering a gesture of 1% of an enhanced rate to investors, which respectfully will beat any deposit account over the same period. So again, just to put it in very simple maths, that means for a 10,000 euros investment, that's 100 euros that's rebated to the client from day one. Obviously, for larger investments, the figure increases. So just that's a very high level. I'd like to thank the guys again for their time. And as I said, thank you very much all for taking the time to go on today's call.
Thanks, everyone.
Thank you. Take care. Thanks, everyone. Bye-bye.